Modern banking runs on an invisible currency, trust. Lenders measure this trust using a three-digit metric known as a credit score. For those with a low score or no history, this creates a specific obstacle. Banks generally refuse to lend without a proven track record, yet establishing that track record requires an active loan. Applying for a standard credit card triggers a hard pull on your report, causing an immediate score drop. If rejected, applying elsewhere compounds the damage. Multiple inquiries suggest financial instability, making you appear less reliable. When you lack the history required for an unsecured loan, the solution is to back the request with physical collateral. Secured credit cards provide an entry point into the financial system by changing the requirements for approval. The mechanism of a secured card starts with an upfront, refundable security deposit. This deposit is separate from your monthly spending. It sits in a reserve account, untouched by the bank, while you use the card for daily purchases. The deposit sets your credit limit. A $200 deposit equals a $200 card limit. This 1-to-1 ratio ensures the balance cannot exceed the collateral. As a failsafe, if payments stop, the bank seizes the deposit to cover the debt. Because the bank's money is fully protected, they can approve applicants without performing the rigorous credit checks that often lead to rejections. Approval for these cards is based on the mathematical certainty of the deposit rather than the risk profile of your past financial history. After receiving the card, you make routine purchases and pay the statement in full every month. The card issuer then sends reports of these on-time payments to Experian, Equifax, and TransUnion. In a FICO score, payment history is 35% of the calculation, the most influential factor. Consistent monthly reports add positive data to your file. Over time, this new reliable record begins to outweigh older negative entries. Market innovations have lowered the barriers to entry even further. Some cards offer partial collateral options, requiring only a $49 deposit for a $200 limit, while others link directly to your payroll for automatic payments. A secured card functions as a data delivery system. Its primary purpose is to generate specific entries your credit history needs to appear trustworthy. Secured cards are temporary tools. They're designed to act as bridges back to traditional credit products. After 7 to 12 months of responsible use, the bank typically conducts an internal review of the account. By this stage, your record of on-time payments provides the proof of reliability the bank needs. The physical collateral becomes obsolete. The bank then graduates the account. They upgrade the user to an unsecured card and often provide a higher credit limit based on the newly established record of trust. At this point, the bank releases the security deposit and refunds the money to the user. The secured card allows you to use a physical asset to build the digital history required to access the broader financial system.